Hi everyone, welcome to today's video. So there is a lot of doom and gloom in the Indian stock market investing right now. People are really worried that the markets are going to fall. There is extreme negativity in the market. News channels are reporting as if, that entire Indian stock market is going to vanish from earth. FIIs are pulling their money out of India and a lot of negative general commentary is there. So people have started to stop their SIPs. People are not buying stocks. So I'm releasing this video as a message of hope because I'm quite hopeful about the Indian stock market. I feel that the Indian markets are bottoming out. I will show you data, points. I'm investing in the market now. I had built some cash positions in the last few months, which I have started to deploy already. Now, this is not a push from my side that you should also go and invest your money. But hopefully by analyzing and understanding this video and doing certain kind of forecast, you will be able to better understand whatever is happening in the market. Because most of these stock market commentators, they simply go and do post-mortem report. When I was talking about Adani 4 months back, no one was listening. And now everyone is talking about Adani. So right now there is a lot of negative commentary, but I am quite hopeful about the markets. This again does not mean that, the markets cannot fall by 5-10%. They of course can at any point in time. But generally from this stage, I feel that it is better to be invested in market rather than pulling your money out of it. So in order to understand this entire context, let me do a point-wise analysis. So the first key point that you need to understand is the historic point. Go 3 months back. There was so much negativity associated with two different asset classes. One is like cryptos, people were extremely negative. And second, there was a lot of negativity associated with US stock market. People were saying that, Tesla wale ne khud ne stocks bech diye, Elon Musk sold his own stocks only. So much firing happening in tech. Tech was overvalued. It rose so much. After pandemic, there is hardly anything left in tech, whatever, right? So this type of negative commentary was there. Now take a look at this chart that in the last 1 month, Nasdaq Composite has increased by roughly 18% gain. So the US stock market, according to me, bottomed out roughly a month back. And this is a community member post that I had made talking specifically that I'm building aggressive positions in the US stock market, and that entire portfolio is massively in green. Similarly, lot of negative commentary against cryptos. Now again, I don't want to touch upon this topic because this becomes like a talking point for a lot of people, no fundamental value, this, that. And I categorically mentioned the fact that I'm building positions in Bitcoin. You don't have to do it. I'm switching all my positions to Bitcoin. That is something that I have done. And now Bitcoin is up roughly by 40% in the last 1 month. Again, you analyze crypto oriented companies. For example, Coinbase, it has been up by roughly 90-95% in the last 1 month. So according to me, a massive bottoming out of US tech stock had happened roughly 1 month back. Similarly, it had happened to a very large extent in cryptos, and right now that bottoming out scenario is playing out in the Indian market. So the lesson being that if you feel that the markets are bottoming out in India and if you start building more positions now, then there is a good chance that you are going to make a lot of money in the upcoming few months. Now again, not a push from my side. This is not a stock investing recommendation, this, that. I'm honestly presenting a transparent discussion in front of you that will help you make up your mind as to what might or might not happen. So now you might have a natural response that as to why you are saying that Indian markets are bottoming out. Can you present some data and analysis around it? So this is a very important point, and here you should start making some notes. So reason number one, why I feel that the Indian markets are bottoming out is due to the time correction that has happened in the market. So what do I mean by time correction? So for example, this is the Nifty 50 chart, and what you will see is that right now the markets are dancing around 17,700 levels. Now when was this level last there? So in 1.5 years, Nifty 50 has given 0% return. Okay, now you'll say कि यार ये छोटे मोटे correction तो होते रहते हैं, right? I mean, 1 साल return नहीं मिला, 2 years return there is 0, 3 years return there is not much. But it's not as if that over a course of 4-5 years, the stock market return will be close to 0. Why would that not be the case? So think about it this way, that you are getting 7-7.5% returns when you go and do fixed deposits. Now, if you keep on getting 0% return from the stock market for 1 year, maybe you'll be okay. For 2 years, maybe. By 3rd year, you will lose your patience. You will simply say that the stock market game is useless. Your mummy and papa are going to say that bahut ho gaya stock market wali cheez. Now just simply go and do fixed deposit or buy a land or whatever it is, right? So to cut the long story short, if people do not make equity returns over a period of 2 to 3 years, it is very, very unlikely that they are going to stay in the equity market. People do not bother too much from a long-term perspective. For them, long term means 2-3 years. If people are not making returns from the equity market in 2-3 years, they are out of it. Now, it has been 1.5 years where Indian market has given 0% returns. If in another 1 year the markets do not move, there will be a large segment of retail investors that will drop off from the market almost permanently. Now you might have a natural question that Akshat, okay, all this sounds like a made up number that, 3 years, if people do not make return, they will jump out of the market. How do you know? So here is the data point. Take a look at this. I will read it with you. So direct net buying by retail investors fell to 528 billion in the first half of financial year 23. This is down 12.5% from 603 billion dollars in the year 2022. Now we all know that 2022 was a really bad year and almost 12.5% less investments from retail investors came into the market, which is a negative sign. If 2.5 years of bad return or 0% return happens in the market, it is very, very likely that you will see an exodus. So the word of the day today is exodus. Let me know what does that mean. So there will be a mass exodus of retail investors from stock investing. And guess what? The government does not want you to do that. Now again, you will have a natural question. How do you know that government does not want us to do that? Okay, so this itself will be a lecture of 5 hours. In fact, I have done some classes on this particular topic in my stock market course. You can go and check it out. It will help you understand stock market fundamentally. If you have any questions, you can always ask me on the Wisdom Hatch community that we are building. This is for serious investors. If you are considering learning about stock market, you can definitely check it out. So there are 3 precise reasons. The number 1 reason is the chest thumping. So for example, chest thumping means that if the market goes up and if the Indian market is doing well. What is meant by Indian market? It means the Indian stock market is doing well. It becomes a badge of honor for the government because they can always say that, there is like so much bullish sentiment in the market. It becomes a chest thumping point for the government that Indian investors are benefiting. There is general positive outlook in the economy. So how do you measure all this? So the one data point, very important data point, is the GDP, which is the macroeconomy related data point. And second, most important data point is the Sensex or Nifty returns that people are making. This becomes a fairly important consideration for the government. The second key reason is that investors' sentiment needs to be kept high, especially the foreign players. You must have seen that every finance minister, every chief economic advisor, even prime minister, their cabinet members, they keep on saying that it's very important for India to get foreign investors. Now, when will foreign investors come? When they see the scope of making money. When will they see it? When there is actual return happening in the Indian market. So this data point of keeping the stock market alive is very, very important. Third, without belaboring too much things, it just generally creates a very positive environment domestically. People feel happy if they are making more money. And the best part about stock market is that the returns can be tracked very, very easily. On the flip side, if you go and buy a home, it's very difficult to keep a track of how much price movement of home would be. Moreover, there are more taxations associated in terms of selling or buying a house. For example, there is an 8 to 12% stamp duty in terms of buying real estate. Similarly, there are a lot of commissions involved if you're buying any other type of physical asset, for example, gold, silver, all that stuff. So to cut the long story short, stock market sentiments are extremely important or one of the most important things that government actively looks to control. So 2 very important points that you have studied so far, that number 1, the Indian stock market has not given returns over the last 1.5 years. And if it takes another 6 months of recovery, then we are looking at 2 years of zero returns, which is a fairly high time correction that has happened. Second thing, a lot of retail investors are already dropping. Now, third key point why the Indian stock market is bottoming out right now is that there is a big bomb that has exploded. There is some kind of mega event that is associated in terms of bottoming out of anything. For example, in 2008, what was that mega event? It was the financial crisis. In 2020, what was the bottoming out event? COVID. What was the bottoming out event in the crypto market? It was the collapse of FTX, which was the second largest centralized exchange. What was the bottoming out in the US market? It was the massive layoff and Elon Musk selling his own Tesla stocks. So that, according to me, was a bottoming out event when it came to tech stocks. And big companies like Amazon corrected by 30-40%. You had Microsoft correct by 30-35%. And now all these companies are rising. So something similar is currently happening in the Indian market, where the poster child of Indian stock market, which is the Adani group of companies, they are exploding. This is a hyper local event. For example, Adanis have very little exposure outside India compared to within India. So this is a local event for the Indian market. And if the Indian market, to whatever levels it falls, for example, let's say we are right now at 17,800 Nifty levels. We might fall to, let's say, 17,000. Then that becomes the bottom of the Indian market, or a very, very strong bottom. So this situation is going to clear very quickly over the next couple of months. To what extent are Adani stocks going to fall, and what would be the impact on the Indian market? So this brings us to a natural question that, Akshat, you said that the markets are bottoming out and Adani group of companies right now are exploding. So how can you be sure that Adani group of companies will not lose more market value? That's A. And B, how can you be sure that the Indian stock market overall will not fall? Now see, I can't be sure, but I can do some kind of scenario analysis. So there are two scenarios which are likely to take place from this point. The two scenarios would be that number one, there is going to be a partial crisis. And the second scenario would be a full-blown crisis. So let me explain that and then let me walk you through it. So the partial case scenario is already underway. For example, a report by Hindenburg has come out. I will link my video in case you have not watched it. So you will understand the entire context of this crisis. Now, report has already come out. Adani ji hasn't given a very strong response to that. That is what market is believing. This is not what my opinion is. And therefore, you are seeing like 50-60% correction. Now, on top of this, the international community also somewhat believes that, you know what, the Adani ji's group of response hasn't been too good. It is somewhat bad. And they have also issued caution on it. For example, you had MSCI index that has said negative stuff about the Adani group. You had Credit Suisse, which has said negative stuff. You had Citibank that has said negative stuff. So a bunch of international players are now saying negative stuff about Adani group of companies. Now you might respond that, you know what, this is like internationally motivated. I don't want to get into all this politics. This is what big international institutions outside India has said that also had somewhat of a direct to indirect exposure in the Adani group of stocks. So they are probably making their money oriented decisions. So this partial crisis is already underway and we have seen 50-60% correction on Adani group of stocks. Now, has this created a massive impact on the overall Indian equity market? So the short answer there is no, not majorly. Nifty right now is trading at 17,800 when I am shooting this video on Friday. So this is not a massive correction by any measure. You will have a natural response now that, you know what, fine, agree that this is a partial crisis, but can it go to this full blown zone? So what would a full blown crisis look like? Okay, so this is where it can start. For example, if SEBI and regulators come out and say that, you know what, something wrong with the Adani group of companies, that will again trigger the market. Very likely that the Indian markets will fall. Second key thing, that the government indicates that they are going to form some kind of committees. They are looking more into it. Some kind of official statement comes into it. Whether this is going to happen, not going to happen, I'm not going to comment on that. But this is how usually it works out, that some kind of joint parliamentary committee will be formed. They might uncover some details and it might lead to bad stuff. Third and final problem would be that these regulators, these government-oriented agencies find some kind of murk or dirt within the Adani group, and that can lead to a massive internal crisis within the Adani group. So the stocks might even fall to like, I don't know, 80-90% or whatever, and that might create like a snowball effect. So in that scenario, of course, the Adani group of companies are going to get massively hurt, but the chances are that there can be outright loan default problems which might seep into the market. For example, a lot of banks have given loans to Adani. For example, SBI, they have given loans to Adani group. They might take that bad debt exposure. Now, good thing is that as per this tweet, SBI does not have a massive exposure to the Adani group. So far, no bank has said that we have had a lot of exposure to the Adani group. Now, I can't comment on the veracity of this data, but so far the market is believing in this narrative that the Indian banks do not have a massive exposure to Adani group, which is a very, very good sign. And therefore, I am saying that the Indian markets are bottoming out. Bottoming out means that it has formed a base. It is very unlikely that it is going to fall massively from this point. Now, one point that no one is talking about the Adani group and our government's ability to handle crisis has nothing to do with our government per se, but it is generally how the governments control the financial market, so to say. A classic case in point is the Evergrande crisis. So if you go back roughly 6-7 months back, there was a crisis in China called as Evergrande crisis. So it was a very big real estate player. It had a lot of exposure to debt. It had so much exposure to debt that the Chinese banks or Chinese state-owned banks, they had a lot of exposure to that debt. So it was being said that, you know what, the Evergrande crisis is going to collapse China. And the Chinese stocks suffered locally for 3, 4, 5 months. And then what? Now the Chinese stocks are doing fairly well. So the summary point is very simple, that if the Chinese government wants to control their market, they will control their market. It's as simple as that. Everything is tied to money printing. Now, I'm not saying that Indian market functions exactly like the Chinese market, but we have to agree to the point that the Indian government also exerts a lot of influence on the financial market in India. You would have seen that, you know what, with one announcement, RBI can derail like fintech companies. With another announcement in the budget, the insurance companies took a lot of beating. So to cut the long story short, the financial markets are very heavily regulated, controlled by the governments now, whether we like it or not, which is also a good news. Because if you are generally optimistic in the market, you can be sure that the government will do everything in its power to bring the markets back. Because it creates a lot of headache for them in case the markets goes down aggressively and there is widespread panic. So now comes the final section where I will talk about that if you do believe in this bottoming out scenario for the Indian market, then how you can make money and what are some of the key points that you should remember. So point number one that you should remember is that don't get too attached with the Adani Group game. Just don't try to catch a falling knife that, you know what, Adani Group companies are falling. कितनी गिर जाएंगी मैं खरीद लेता हूँ. Well, they can go to absolute zero also in case some kind of murk gets uncovered. So please don't believe in this catching the falling knife theory. Catching the falling knife works well when you're trading or investing in fundamentally good companies. Now, if you have the faith that, you know what, Adani Group of companies are fundamentally very good, go and invest your money, no problem. A contrary point here would be that on the flip side, don't say like that, you know what, markets gir rahe hain, what will I do by investing? Why should I continue my SIP? I'm not making any returns for 1.5 years. Well, if you can't undertake or digest volatility in the market, then stock market is not the place for you. You will not make money in the stock market. In order to make money through investing, you have to take risk with your money intelligently. So that is what it is. Right now, according to me, it's a great time. Tomorrow, I will make a community post also talking about which type of stocks I'm looking to purchase and what type of assets I'm precisely buying. Point number two, the Adani story is going to impact our broader market, no doubt about that. In the short term, it is a very high likelihood that even the Indian market might fall by 5-10%. I don't know. But I can say it with a very high degree of certainty that if you take a look at 4-5 years of Nifty returns, CAGR will come out to be at least 12%. That has not happened in the last 1.5-2 years. So that means that the deficit in the gains will be made up over the next 2 to 3 years. If you have that vision, if you have that clarity, then go ahead and invest, figure out good stocks to buy. So then comes the natural third point that, okay, what are good stocks to buy? Well, I will not give you a list because then you will hold me morally responsible for making those stocks go up from tomorrow. So I will not do that, but I will give you a basic understanding that please do not buy high debt companies. Because if the Adani thing blows up, if Adani Group goes down or suffers badly, a lot of banks will become a little bit more iffy in terms of giving out loans to other small businesses. So they will suffer. Especially the businesses that require a lot of capex, stay away from them. They will find it increasingly harder to refinance their debt. Why would that be the case? Because in case the Adani thing blows up, then the government will come out with a set of new regulations, you know, ye hona chahiye, wo hona chahiye and all that stuff. So credit flow slows down. So that really impacts businesses that are already on high debt. Then comes the final point that please stay diversified. This is a single sentence that I keep on saying on almost all my videos. Then I get the counter argument that, you know what, Akshat, that Mr. Warren Buffett has 40% of his portfolio in Apple stock, this, that, he's a highly concentrated investor. Do you know more than him? No, I do not. But Mr. Warren Buffett is not a retail investor. He can afford to have a concentrated portfolio because he has access to Tim Cook directly. If he needs clarity on some information, he can call up Tim Cook. If people like you and I even reach out to product managers at Apple, it is unlikely that they will pick our phone. So for retail investors, our investing style needs to be different from shark. If you are a goldfish, don't try to be a shark. So that's a simple message that I will leave you with. Hope this video gives you a lot of confidence. If it did, do press the like button and share it with your friends, and I will see you soon.